I'm Charlotte McLeod with investingnews.com, and here today with me is Craig Hemke, publisher of tfmetalsreport.com. Thank you so much for being here. Great to have you.
Charlotte, it's always good to see you. Thank you for having me on.
Really good to be speaking with you. Probably a perfect time to have you on with the gold price trading at or near all-time highs. I'm hoping you can help us unpack what's going on. You recently wrote a great piece where you talk about some odd occurrences in the gold market that seem to keep happening. And I think that really sums it up, or maybe it understates it. I think we'll find out during this conversation. Where I was hoping we could begin is with this transfer of gold from London to New York. Can you talk about why that's happening? What's going on there?
Well, there's definitely something interesting going on. We've been told by the mainstream media this is all due to tariffs and metal being reshored in the U.S. to shore up the COMEX before any tariffs might kick in. I've yet to see where Trump discusses something about gold and silver getting a tariff. You know, I mean, and maybe there are some specifics just with countries and things like that. But I don't know. I started thinking about a month ago that maybe we're being gaslit. Is that the proper conjugation of that? Gaslighted? Gas? And the more I thought about it, the more I'm convinced that maybe that is exactly what's happening. If you spin things back, the calendar back, you'll recall, listeners will recall, gold was at previous all-time highs right before Trump got elected in late October. And the day after Trump got elected, gold plunged. And then later on in November, it plunged. By the middle of November, it was down 10%. And, at the time, it was like, well, it's going to be inflation and, maybe no cuts of interest rates and who knows what else. And so that was this rationale for, for gold going down. Then we got to the early part of December. And suddenly we started getting the first hints of this current situation where the spot price and the futures price moved away from each other. They should always be pretty close. The front month future should always be pretty close to spot, just through simple arbitrage, where you buy the spot, you sell the future, and, the whole thing can sort itself out when that contract goes into delivery. And because that arbitrage wasn't taking place, that spread widened out to $30 or $40 in December. Well, then here came the December FOMC meeting, and hawkish, no more rate cuts, that kind of stuff. And gold plunges again. Ever since that meeting, Charlotte, we got down to 26.20 in the 18th or 19th of December. And particularly since the first of the year, I mean, it's just been a 45-degree angle straight up. So again, so what changed? Well, something changed with the election of Trump. And we started seeing this in December. Whether it's, well, gosh, they might put on tariffs eventually. I don't know, man. I think gets more to the idea that there's something else brewing behind the scenes. And that's why there's been this consistent bid for gold for the last 6 weeks.
Yeah, I think it's really interesting because definitely that tariff narrative is so dominant, and maybe that is a red herring, or as you said, we're getting gaslit or gaslighted, whatever we want to conjugate that as. You had written in your piece that maybe there's something else going on, and it could be that the U.S. wants to bring this gold back home for this monetization idea. Can you go into that and explain for those who might not be familiar with this idea?
Yeah, and this ties into this audit Fort Knox thing. A couple of signposts that got people's attention along the way was an article in the Financial Times, the veritable Financial Times, the pink paper Financial Times. This is now 4 weeks ago or so, where they said so much gold is leaving London that there are now delivery delays of up to 4 to 8 weeks. Now you're supposed to be able to get a delivery in 2 or 3 days. So if it was anything other than gold and all of a sudden it's 4 to 8 weeks, people say, well, that's a default. You promised me this, at a certain time period. You're telling me it's this long. And so that started getting people's attention, right? And then there was like an impromptu little news conference in the Oval Office on, I think it was the 3rd of February, where Trump is sitting down signing executive orders, and to his right is the new Secretary of the Treasury, Bessent. I don't even know how they pronounce his name yet because he's so new. And Trump says, "Hey, Scott's, we're going to be doing some things," and Scott's got some words on that. And Scott kind of, camera goes over to him and he says, "Yeah, we're looking at ways to monetize assets that we have on the balance sheet. Any balance sheet's got assets and liabilities, and U.S. sure has a lot of liabilities, 36 trillion of them. So we got some assets. We're going to try to monetize them." And well, okay, well, what's an asset that the U.S. has? Well, one of them's gold. And then you look at all this flow of metal that is so significant that it's disrupted this just-in-time delivery that the LBMA in London operates on. Well, why are we onshoring all this gold? Maybe we're looking to monetize the gold that the U.S. has. And then another step down that path is, well, how much does the U.S. really have? We tell everybody we got 8,133 metric tons. Do we have all of that? What kind of form is that gold in? All these things, all these questions are starting to get asked. And so it seems to me, Charlotte, that there is, again, just started with the election of Trump, right? I mean, Trump didn't start talking about, we're going to put on some kind of EU tariff or something in the middle of December. Why all of a sudden gold start moving higher? So you start connecting some of these dots, and it seems like that's where we're headed. We got to know how much gold there is. They might try to revalue it to some newer level than what it's been valued at since 1933. And then they'll try to, and maybe they'll, I'm going on and on and on here, but there is a lady by the name of Judy Shelton. I don't know if you've ever spoken with her, but she's written a number of books. Her big idea is that the U.S. should issue 50-year treasury bonds that are somehow backed or indexed to gold with the principal. And if you do that, you keep the interest rate on that 50-year debt really low. And then maybe if you do something like that, then you could use those funds that you collect in that bond issuance to fund your sovereign wealth fund and all this stuff. Well, Judy Shelton's not just some quack. Trump knows her. He nominated her to be on the board of governors of the Fed back in 2018. So, I mean, you can kind of, like I said, there's a lot of these, what seem to be disparate dots out there. And I don't mean to be like Russell Crowe, in his garage playing, oh God, now the guy's John, senior moment. Anyway, the movie. I don't mean to be like that, but that's kind of what we're all trying to do here. We're all trying to connect the rising price, the onshoring of the gold, all of a sudden we want to look at Fort, trying to see where maybe this is all headed. That's what we're trying to do.
Yeah, I know exactly what you mean. So we've got the dots. We need to see if they make a picture and what picture exactly do they make. So many paths to go down here. If the US ends up doing this gold revaluation, how do they choose a value? Right.
Well, it can't, you would think it could just be arbitrary. Would it be arbitrary? If you roll things back, it was $20 an ounce. Back before we had the gold confiscation, if you will, everybody was forced to sell their gold back to the government at $20 an ounce in the early 30s. And then they repegged it at 32. So nobody got the benefit of that, right? That's whatever that is, 60% devaluation. But everybody was told to turn in their gold at 21st. We've been carrying it at 32, and now actually it's 42 on the U.S. balance sheet since after World War II. Well, I mean, everybody listening knows the spot price of gold is more like $2,900. So if in fact the U.S. does have 8,133 metric tons of gold, and I think even if all the bars are there, it's probably overstated by 10%. And I can explain that if you'd like me to. But let's just do that math. 8,133 at $2,900 gets you about $720 or $30 billion. You could say, just out of the blue by valuing it differently. So what then if you took that $720 billion and you back some treasury bonds with it that, maybe nobody wants to buy 50-year U.S. paper at 3% because of your loss of purchasing power over 50 years. But if you index your principal to gold, okay, I'll take 3%. So maybe there's a way they do all this. again, in all of this math, where do you revalue it? Well, heck, Charlotte, what if we revalue it $10,000 an ounce? Well, now we got 2.5 trillion to work with. So I don't know. If I might continue, people say, well, that would be so terribly inflationary because they'd be creating, $2.5 trillion out of thin air, basically. Well, I don't know. Would it? I mean, they created 5 trillion out of thin air and pumped it out to everybody during COVID, and that was inflationary. This would be half that amount. And it wouldn't necessarily, it'd be a little more like the QE programs in the great financial crisis more than it would be what happened in COVID. So I don't know if it'd be inflationary or not to mark it all the way up to 10,000. Again, these are all these mental gymnastics that everybody that watches gold and writes about it is kind of flipping themselves around trying to figure out.
Yeah, it's very tricky right now. And I was going to, I think it's probably too soon to tell, but I'll ask you anyway. I was going to ask, what does this mean for the gold price? And then, there's all these concerns over the US debt and that kind of thing. Is that a path to fixing it? How does that possibly play out?
Yeah, I don't think it's a path to fixing it. Because again, if you had all of a sudden called all the gold $10,000 an ounce on the balance sheet, well, that makes what the U.S. alleges they have worth $2.5 trillion, and we're $36.5 trillion in debt. So it doesn't really help that. I've seen some people write that it shores up the dollar if suddenly you issue some treasuries. Judy Shelton has written about this, the original person with the idea. You issue some treasuries backed by gold, maybe that kind of shores up treasuries as a foundational asset, helps a dollar by extension. You could make that case as well. Again, everybody's always said, you can't do that because it'd be so inflationary. And I'm not so sure about that argument, as I was just saying. So anyway, get back down to what the Secretary of the Treasury said about monetizing the asset sometime in the next 12 months, do it in a way that there's within the financial system. And people with their active imaginations like myself have just thought, okay, well, maybe this is what he's talking about. But he did say 12 months. So I guess maybe we won't have to wait long to find out.
We might. And yeah, you mentioned you're going in a gold direction with your interpretation of that statement. What are other possible interpretations we could look at?
Well, what other assets do the U.S. have? You mean that kind of thing? You wonder. What do we count as assets? Strategic Petroleum Reserve. I'd be interesting to see what, all I know is that I don't think the balance sheet adds up because I don't think, you're supposed to. The only class in college I ever dropped was accounting. I hated it. It was all black and white. There was no gray. And I'm more of a salesperson. I like the gray. And so I hated accounting. But I do remember the assets are supposed to equal your liabilities, right? So we have a lot of liabilities. So, but I don't think they're totally matched with the assets. And so that's all part of what they're trying to get at to shore up the U.S.'s financial position because it's still pretty bad, right? The numbers so far, just in the first 4 fiscal months of the current fiscal year, the U.S. has run a deficit of $840 billion, about 4 or 5% ahead of the pace of last year that came in at 1.8 trillion. So we're on a pace to run about at another 2 trillion this year, Doge and everything else notwithstanding. So we got to be doing something. And so that's why I think they're kind of trying to think outside the box a little bit.
Okay. Sorry to make you speculate so much when, as we keep saying, there's so little information available. I want to go back to this Fort Knox gold audit that Elon Musk is proposing that Doge perhaps undertake. I have a really hard time when it comes to Elon Musk gauging when he's serious and when he's, talking on social media and just trolling everybody.
Right.
So what is your sense there? Is this something that's actually going to happen? Is this signaling that this administration really, really cares about this? What do you think?
Yeah. How do you figure, because this has been talked about lots of times. And when they run Trump's first Secretary of Treasury, Mnuchin, in there in about 2017, and took some black and white photos of him holding gold bars as if that meant anything. I've been there. So, you read Congress people who should have the power to go to Gold Knox are denied access, and the full audit, I think, hasn't been done in about 70 years. So we don't know what's there. Now, Trump, we'll see, but he's done other things that are like, wow, they really going to release all the JFK files, stuff like that. So, I mean, that's some stuff that's, no other president has ever even discussed doing. So maybe they really will go in. And and frankly, if this gold revaluation and bond issuance monetization thing, you're going to need to know exactly what you have. So is there gold in Fort Knox? Of course there is. I'm sure there is. Is it all the U.S.'s gold? Has it been leased and, sold out into the global market? Who has a title of the gold? Well, I guess whoever owns whoever has the gold has it, you got it first. The other part of it, though, that I mentioned earlier is the overstating of it. Most of the gold, at least in Fort Knox, or really in most of the U.S. gold reserves, are what's called the coin melt variety. I mentioned the confiscation earlier, right? And back in the 30s, that's where a lot of this gold came from. And so all the gold was collected and then melted down and then poured into the kind of standard issue 400-ounce bricks. Well, the problem is a lot of that coin melt stuff is not the 4.9 standard. The shiny kilo bars you see, when we talk about what's going on in Shanghai and other parts of the world, those are 4.9s, 99.99% pure gold. Okay. The bars in Fort Knox are 90% primarily because they're all that coin melt stuff. So even if we do have 8,133 metric tons, by the time you sift through all that, is the gold that's actually there overstated by 10%? It's not all coin melt, but so to say it's 8,100 metric tons it's not maybe necessarily 7,400 metric tons by the time you bring it up to full purity, but it might be more like 7,600 or 7,700. You see what I'm getting at? So again, the pieces kind of fit together. If you're going to actually monetize the gold, as the Secretary of the Treasury said, then you need to know how much gold you actually have. So therefore, you're going to be onshoring and bringing all this gold back. The U.S. was a net importer last month from the UK, from Switzerland, from Singapore. Every place that you get gold has been coming into the U.S. Ahead of the tariffs? Or is it ahead of getting it all back on shore because we're going to monetize, we're going to find out but we got to find out what we have first. It's a possibility that, maybe it is just a tariff. Maybe it is. And we're all just making a mountain out of nothing. But again, you look at all these things, if and when the time comes a few months from now that they actually do audit and they do have a number, and then all of a sudden it's announced sometime that they're going to revalue gold to X and issue these bonds. Everybody else is going to sit back, on Bloomberg and CNBC and go, damn, how do we miss that? While people like you and I are sitting here, speculating and talking about it now.
Yeah. It's definitely a wait and see mode. And I like that you keep the possibility open that this could be wrong, could be the tariffs, could be something else. Yeah. Really good to look at. And that question of is the gold there and how much of it kind of takes us back around to another piece that I wanted to ask you about, which is, okay, so all this gold is coming from London. How is the situation in London looking? Because I've been hearing, they don't have enough gold. What
Right.
do you see there?
Right. This, I have railed against this, in the history of this for as long as that was 15 years now. The London, New York pricing structure scheme relies upon kind of a just-in-time delivery, physical delivery, at a price that's determined through the trading of derivatives, futures contracts in New York, forward in London's. It gives you the impression there's far more gold than there really is, just in the trading volumes that you see. Billions and billions of gold are traded every day, but what are traded are these, just these derivatives, these swaps, these forward contracts, whatever. And it's kind of like a fractional reserve system, that you've seen, like your local bank. You deposit $100,000 in your bank. They don't just put it in the vault, right? I mean, they put it in people's homes and businesses and all this stuff. And if you want your $100,000 out, you can't just walk into the local bank and have them bring it out to you in a briefcase. And that's kind of what the gold system is. Now, the Bank of England, which runs the vaults in London, they store their gold there. 4,500 tons or whatever the Bank of England says they have. Almost all of the primary ETFs, like the GLD and the other ones, they store their gold in London as well. Now, the LBMA looks at that as part of the available float, that's somehow able to be delivered. If somebody were to show up and say, hey, I need a metric ton of gold. Well, okay, look, we got 8,000 metric tons here. Well, do you? Because you're not supposed to be able to, that the gold that's in the ETFs is for the ETFs. It's not just for the bank to reach in and grab some and send it out the back door. So there have been some great analysis has been done over the last 10 years. A guy by the name of Ronan Manley has studied this and broken it all down. And he thinks the actual float, the actual amount of gold that's available to be delivered in London is more like 700 or 800. Let me get my number. 700 or 800 metric tons, right? Yes, that's right. Okay, make sure I get my numbers right. Of the 4,000, 8,000 metric tons that they say they have, it's maybe 700 or 800 metric tons they actually have. That sounds like a lot, right, Charlotte? Then we see the latest World Gold Council numbers, third year in a row of record central bank demand, totaling about 3,200 metric tons. Okay, versus this 800. All right, well, so where's this gold, where's it coming from? And that's where people start to wonder. So then all of a sudden you see this gold that's leaving London and going to the US. And then you get this story in the Financial Times that says, you got to wait 8 weeks. Well, no, wait a second. If you've got all these thousands and thousands of tons, why does somebody have to wait? If they want 10 tons, why do they got to wait 8 weeks? And I mean, I think it's logical to ask. And then they put on this charade and say, well, we got to have the loading docks cleared and it's heavy. They actually said that. In a press conference at the Bank of England 2 weeks ago. So it just makes, knowing how the system operates kind of on this just-in-time delivery anyway, knowing that the global central banks have eaten up about 3,200 metric tons in the last 3 years, it makes you wonder how much do they really have when, and if they're saying, oh, everything's fine, don't look at us, but we can't get it to you for 2 months if you want some. Well, again, I think a rational person would wonder what's really going on here. And I think that's what's kind of starting to spread a little bit.
Yeah, I think it really feels that way. And I don't want to keep you too long today, but before I let you go, I'll ask you, there's so much going on under the surface in the gold sector right now.
Sure.
Is there anything else that you have on your radar that you think investors should keep an eye on right now?
In terms of the gold market or the precious metals in general?
In general, yeah, just these kind of subsurface things that are maybe coming to the surface.
Yeah. I wrote about that in my forecast this year. I always write these annual forecasts over Christmas holiday and usually try to put it out in the 1st of January. And I write it for myself primarily because I forget, over the course of the year, you forget about all the stuff you were thinking. And, I thought price would go here and it never happened. I need a reference to go back so I can kind of, learn and do better next time. Well, I did that this year, of course. And I was like, well, what did I miss? Because I didn't think gold would go to $2,800 last year. I thought it'd go maybe 23. And here the bond market's selling off and rates are going up and the dollar's going up and gold just keeps on going. What did I miss? And I thought, well, I think the key thing I missed was this central bank gold demand. That's really putting a floor under the price, kind of a physical floor under that derivative price. Because, you see it, gold just keeps, doing this stuff. So now going forward, what do we want to, outside of all of this stuff, maybe the the U.S. trying to repatriate all this gold and get their arms, or whether it's, or maybe just shoring up the COMEX ahead of tariffs, whatever. If that's thrown such a wrench into the delivery scheme, in the pricing scheme, well, then this ongoing central bank demand is just going to continue to stress it. And so I would want everybody to continue to watch that. There was a report, it was recorded this today. Goldman Sachs thinks that China's demand in January wasn't 5 metric tons. It was actually 45. So, if we're going to do another year of, officially reported 1,000 metric tons, the price is going to keep going higher regardless of this. What are they doing in the Trump administration? What do they got cooking for us here? So I would encourage everybody to really keep an eye on that stuff, and keep an eye on the silver deficit numbers too. Everybody talks about, the 700 billion ounces a year in supply deficit the last 4 years. But don't worry, there's billions of ounces above the surface, as if, your candlesticks and grandma's tea set, which are counted in that, are all part of, the readily available supply. The amount that gets sold back, that's starting to dwindle too. So keep a real close eye on the actual physical supply demand numbers. And as long as they continue to be strong, the shenanigans that can get played with the paper price are going to be limited. And that's what happened last year. And hopefully that'll continue this year too.
Yeah, great points. And I didn't even have a chance to ask you about silver this time, but the next time we have you on, we'll go deeper into silver. For now, this was really great. Thank you so much. This helps me understand a lot of what's going on, or what could be going on, and we'll find out later what turns out to be true or not.
Well, I hope that's the case. I didn't just completely confound it. This guy just talks in circles. I don't know, what he said, but hopefully it was helpful. Again, I informed speculation on my part. And we'll just see where we go from here.
Okay, well, very good. Thank you so much. Once again, I'm Charlotte McLeod with investingnews.com, and this is Craig Hemke with tfmetalsreport.com.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.